Okay, good morning. It's February 28th, 2023. Um, what is it? Tuesday, I think. I think it's Tuesday. Yeah, and it's almost 8:30 a.m. Pacific Standard Time. Okay, last day of the month. Where are we with the markets? Markets just basically not doing anything. It's sitting in this balance area. And like I talked about before, these are balance areas are very important. Here's another one here, um, because the way I look at it is the market's gathering steam. It's gathering some energy right here, and when it builds up like this, it when it does break out, it takes off in a pretty big way. Um, just like you saw here, it just took off, and this is actually a build up in here, and it took off and it came down and it built some energy up in here, came up here, this built up some energy, came down here. Now I remember when it was here, I thought it was going to continue down, so I did buy some put options here, and I had eventually sell with a loss here because the market kept going. So it's pretty unusual. It kind of broke the pattern of this market. And that's what the markets do sometimes. So it wasn't, it doesn't do that all the time. So you can see here it had some pretty consistent patterns going down, up, down, up, down, up, down, up, consistently going down. This one broke the pattern a little bit because it went down, it made lower lows, and then it came up, and ideally it would have come down here to keep that pattern going, but it broke the pattern, and that's okay. That's what happens sometimes. And it actually broke this trend line here. So you got to remember that these trend lines, although they are accurate because this is a bear market, but it could break the trend line. There's not a problem with that, and that's what happened here. And it's come back and it's tested this trend line again. So that could mean the start of a new bull market to some people. To me, this is a continuation. I think we're not going to start another bull market for probably another year or two. This thing has to hit bottom because the economy is in big trouble right now. So if this thing were to continue up and break this line and go up, then it's going to cause more problems, because it's normal for a market to correct and wash everything out. And since we have so much debt on the planet, that this market needs to come down, wash everything out, and come back up like it did in 2008. Although 2008 was just pretty much a warning of what's happening now. It wasn't really that much of a correction. It pretty much delayed what's going on now. And if this thing came up and it started a new bull market, it's just going to delay the inevitable, and next time it's going to be even more extreme. So this will be more extreme than 2008, I believe, a lot more, and it's got a lot further to go down. The question is, when is it going to hit bottom? So I'm not too sure about that. I'm guessing this whole year it's just going to continue down, and this right here is the start of this thing breaking down, and now it's in a here. Let's see, wait a minute, that's not what I wanted. So like I said before, these are balance areas that it builds up some energy and it breaks down, and I think that's what's pretty much happening here. That's what it feels like to me. So you can actually buy, if you think the market's going to continue down, you can buy some put options in this area, preferably up in this area here, so when it goes down and it breaks, then you'll make more money. If you bought down here, then as the market came up, and if it broke here and went up higher, then you would take a pretty big loss. So you want to minimize your loss and buy at the very top. if you're going down, and you want to buy at the bottom if you're going up. So this thing's pretty much established a top and bottom right in here, just like this did. So yes, you can find tops and you can find bottoms, because that's how I trade. And so pretty much that's what this is. It's staying in this little balance area. Eventually it's going to break out, and the longer this thing goes, it's strung out like that, it just builds up more energy for either buyers to step in or sellers. And when it does, it goes down in a pretty big way. So I'm assuming that this is ready to break out pretty soon. I mean, you know, could be today, could be tomorrow, or not tomorrow, but Monday. I'm sorry, today is Tuesday. So it could be tomorrow, could be the rest of the week going down. And then, you know, where's it going to go? It could go and stop, let's say, right here before it retraces in a pretty sizable retracement before it goes down again. For this to come back up and then retrace, it doesn't fit the pattern of how this market is set up. So I would assume this market would have to come down to probably around here, maybe here, because that's where the support is. There's another support here, and then retrace back up, pretty good size retracement, maybe up to this line, and then come down again. And that's when you can actually sell your positions and buy back here. And that's what I do. I wouldn't recommend that for somebody who's new at this, because you have to really time this market. Again, this is going to break out eventually, and I'm assuming the market will continue in this downtrend. And like I said, this is a good place to buy put options going, of course, going down. And that's assuming that the market is going to continue down, and that's where I'm putting my money. So you notice I don't have any indicators here. I don't look at the news, because some people say that the stock market makes the news, or others say that the news makes the stock market. I don't really care either way. I just look at this. This tells me everything right here. I don't need any indicators, moving averages, nothing. I don't even need different color. I don't need candlesticks. Everybody uses candlesticks, and you see all the different colors, and that to me is just distraction, and distraction is very dangerous. So there's not that many distractions here. Sometimes I'll have these lines here, and and I'll get rid of them because they could be distracting. I don't need them here. I need to concentrate on what's happening in this area right here. So too many lines could be distraction. Could be a distraction. But this right here all looks good. I put these two lines here because it's pretty good, pretty strong support here. I actually put these here before this market made this this balance area, and like I said, as this balance area gets bigger, there's more tendency of it to go down, if it goes down in a stronger way. So now at this point I'm thinking it might not stop here, it might stop down here, because this is getting pretty long in here. So it could be that I could actually start taking this part out and moving it down into this area, which I see some pretty good strong support, and then that would kind of fit in with the symmetry here, where this comes down into here, because the time zone in here and the time zone in here and the time zone in here all kind of parallel each other, and it would make sense that it would fit that symmetry. So and that's what I look for. I look for consistencies in this market, like these balance areas, these spikes. They're pretty consistent. And even though you see some little inconsistencies, like this right here is actually a balance area, even though it's not fitting into a box. This is a balance area in here. Let's see, I'll draw it out. See, this is actually a balance area right here. And this is actually a balance area in here. And this is actually a balance area here. So these are all balance areas, even though they don't seem like they're really that symmetrical. But they are. They're actually balance areas. And then you get little ones in between here. And I got a small balance area right here. And those are the things that I look for, because I believe the market comes up and it hits these areas like a step. Comes up, hits this area, and eventually breaks down. And this one took off in a big way. And then here you go. You're in this balance area, which is pretty long, maybe a week and a half or 2 weeks, and then it broke down here. And now this is getting a little bit long. And if this market starts to come down, like I said, I think it's going to break down probably into here before it hits any kind of decent retracement like this retraced here. That's pretty good retracement there. This one had a pretty good retracement, and this one so far has not had a retracement coming down. So eventually it's going to retrace, because this market is about buying and selling. That's it, buying and selling. So you've got a lot of sellers in here getting, and it's collecting a lot of energy. Now you got a lot of buyers in here collecting energy again. Now you got sellers. And that's how this market works. It's all you really need to know. You buy something low and you sell it high. And that's applies to business in general. And stock markets is a business. It's the biggest business on the planet. And the idea is to make money. So that's what we're doing here, and that's what we're learning about this market, so we can make some money on this and have a consistent income. Because like I said before, this is not like a job. You're not employed. You're the boss, and you can't get fired. You're the only one that can fire yourself by killing your account, by not doing the right money management in this, and buying when you should be selling, maybe, or buying at the wrong time. I mean, there's so many variables to this, and that's what I'm teaching you here, so you can eliminate a lot of those problems, and then you can start making money right away. But again, this is my system. It's pretty accurate to me. You can come up with your own system within my system, let's say, and then you can trade differently. Maybe you don't want to buy any put options here. And maybe you bought a bunch here and you're just waiting for it to come down to here, and you bought these way out. That's your own strategy, and that's what you have to figure out. So you don't want to mimic what I'm doing, because it works for me, it works for my personality, and it works well, but it might not work at all for you. But what I'm doing is I'm teaching you how these markets work, and you don't need all that crap, all those different colors, and you don't need to look at the news. None of that stuff. Once in a while, I will look at things like when the Fed raises interest rates, because that's such a big deal now that it causes these spikes, and that's a good time to trade. Same thing with this. And every time it makes these spikes, the market's going to go in the opposite direction. The little spike here, a little spike there, and the market goes in the opposite direction. And this one here took it all the way up to here. And then you got another spike here, and it took it all the way down to here. Even this could be considered the spike in this balance area. But like I said, this kind of threw me off, because I thought it was going to continue down, and it didn't. So I took a loss. Not a big deal. If you take a loss, you got to make sure that it's a small loss. And if you make money, you want to make sure that they're big gains to, not only make up for those losses, but that's the idea in this market, is we want to make some money. All right, so that's it for now. See, what else can I tell you? there's, the underlying stocks, you can look at those and see that they're starting to weaken and maybe go down, and that can probably be an indication. But you don't really have to look at that. I mean, this pretty much tells you everything here. Now, if all those stocks started to go up, well, yeah, maybe this can turn around and go up. But just from my experience, the Dow, Nasdaq, and S&P are the ones that pretty much lead the way, and all the underlying stocks are the ones that follow. Now, it's not 100% because some of those stocks don't follow, and what I read recently, that there's a small percentage of the S&P 500 stocks, maybe only like 100 or less than that of all the 500 stocks, that actually are doing well, and they're the ones that have all the money, and the other 400 don't. So this market is really weak. A lot of people don't know that, how weak this is, and eventually it's going to go down, way down. But I look at this. This is an indicator. This is my indicator, and this tells me what the market's doing. So that's it, really. So we're just waiting. That's all we're doing. I got my alert set. I can even set this alert to there. And I really don't care about this because I already bought my position. So even if it breaks that, I might not buy any more in here until it hits another balance area, and I'm guessing since this thing is strung out so far, it's going to probably come down this far before it retraces. Yeah, so that's it. Nothing to do but wait. I'm going to take off, and I'm done. And that's how easy this is. And okay, so I'll talk to you guys tomorrow. We'll see where this market winds up. Doesn't look like it's doing much today. One of these days it is going to pop. Today might be that day. Who knows? But eventually it's going to happen. Okay, talk to you guys tomorrow.